Hello, everyone. This is Tiffany with Team Jones. And today we're going to take a deep dive into interest rates and what's going on and why they're going up. So today I've invited my fabulous loan officer, Marcela Melo, with Alpha Mortgage Advantage to talk to us today and give us what we need to do to navigate interest rates and still purchase a home. Good afternoon, Marcela, and thank you so much for taking the time out of your busy schedule to talk to our audience about the recent increase in mortgage rates or rates overall and how that will affect our clients in this current market. You are a true asset to my clients, our clients, as well as us in finding our dream home and then becoming real estate investors. So I love you, but I want our audience to get to know you and also come to love you just like we do. So tell us a little bit about yourself.
Ms. Jones, thank you for having me here. First things first, I'm never too busy for questions. I'm never too busy for you or for your clients. So please have my number. Always call me anytime you need me. So my name is Marcela. I am a mortgage loan originator. I work for Alpha Mortgage Advantage, and I have been in the mortgage business for about 12 years now. So I've been through a lot of market changes. Again, this is not something we have never seen it before. So I'll be glad to give you guys a little bit of insight on what's happening with our market.
All right. Sounds good. So how long have you been doing mortgages? Did you tell the audience?
A little over 12 years.
Mm-hmm. Oh, that's been a long time. So you've seen the market change from highs, lows, and everything in between.
Mm-hmm.
So I know you have a plethora of knowledge to give to our audience. So the first thing I'd like to talk to you about is recently we saw an increase by the Federal Reserves for the federal funds rate. So what does that mean for mortgage interest rates, and why is it important to buyers to understand this increase?
Yeah, so I think the most important thing is to start by saying this is not abnormal high interest rates, okay? What we did have within the past 2 years was incredibly low rates to where they are not sustainable. They're not sustainable to our economy. It doesn't operate that way. What we're seeing is our market going back. I don't know if you remember, but back in 2018, we were on a high fours, and everybody was happy because we had just came out of a 6% interest rate. So this is not abnormally high. This is still very low rates. If you look at it in the big scheme of things, it's just that we did have a global pandemic. So people were used to the extremely unobtainable low rates. What Federal Reserve funds means, it does not directly affect mortgage rates. It indirectly affects mortgage rates and mortgage buyback securities, okay? So what Federal Reserves are, the rate that they lower was basically the rate on which banks lend money to each other.
Okay.
And subsequently affects mortgage rates such and as well as car loans, credit card interest, all of those things, they come from charges that the Federal Reserve lends money to us lenders, which eventually is passed on to the client by an increase of rates. But it doesn't directly affect the quarter point increase. That does not mean that automatically mortgage rates are going to increase by a quarter point. It could be slightly higher or slightly lower depending on each lender's margin.
Okay, sounds good. So I remember purchasing our home when we came to North Carolina in 2017, and like you're saying, the rate was about 4%. So we're just going back to the normal, and that's right. I think very important for buyers to understand that this is just not a Chicken Little kind of situation or scenario where the sky is falling. It's just we're returning back to
normal
was before the pandemic. Okay, so can you give us an example based on the rate increase of how this may affect a buyer's purchasing power with this increase or potential increase in the rate?
Okay, so buyer's purchasing power to us, to a mortgage lender, means DTI, which is short for a debt to income ratio. Okay, so lenders have different debt to income ratios requirements slightly. Overall, we follow federal guidelines. So just like a credit score, how much money you're putting down, what kind of loan program can affect your interest rate. That interest rate automatically reflects on how much you can get approved for. So, for example, if you were qualified 2 years ago at a 2% interest rate, somewhere in there, this is why it's so important for you to have a local lender, that someone that you can call and openly discuss those things, even if you're not looking for a house right now, but you're like, hey, Marcela, I got approved 2 years ago and I had this much, but I see that rates are much higher now. I'm not looking, but can you guide me on where I'm at now? Because that if you are approved for a $250,000 property at that time, you may be looking at about 220 now, or even 200s. Of course, depends on what has happened in between that time. Where is your credit score at? But that's why we are here. We are always helped to look at each client individually and try to, guide them so they're making smart decisions and educated decisions before they go put in on an offers.
And then can you tell us, it's still a good time to buy, even though mortgage rates may be increasing? Is it still a good time for buyers to be out looking for homes and making that investment into their future, purchasing their first or second or third home, whatever it may be?
Yeah, absolutely. I mean, I can tell you with all these years of experience, and I have seen the market crash. I have seen rates going up, rates going down. It is, like I said, it is still a low rate. We are not seeing a ridiculously high rates where you should be too concerned about that. But, for sellers, people don't stop buying homes because interest rates are high. Okay, or because interest rates have increased, or whatever the situation is. People stop buying homes when we're going through an economic depression. And that is not our scenario at the moment. So absolutely, if you find a house that you want, you should go for it. The real estate market, the value of properties have increased to an astronomical rate, and which is also not unheard of. Some people think we're going to a bubble, and it's not. It's just what we have picked up from all the years that it have not appreciated as it should, people.
Yes.
The beauty of owning real estate is that you get to have equity on your money. And at an extremely low rate. Again, you're looking at a 4%, close to a 5%, depends on where you are. But it's still dramatically low comparing to when you invest that money somewhere else, your return is not as high. So absolutely, it is a great time to buy. It is still a great time to invest. And it is a phenomenal time for selling if that's what your necessities are.
Yes, if you want to sell, please call me, Tiffany Jones. We need more inventory because, like you're saying, even though rates are rising, there are still many buyers looking, willing to pay over appraised value, willing to do what it takes to get into a home. So there is no shortage of buyers out there, which is why we're talking about rates today.
You are correct. I mean, this is not an economic depression. It's not a time to stop. It is a supply-demand issue. I don't think we need to be worried about the market crashing. That's not what economists are looking at. And you should do your research for yourself. That is not what we professionals believe it's happening in the market. We are truly going to a supply-demand issue.
That is so true. All right. So outside of mortgage rates increasing, what are some things people need to consider, like do they have a great credit score, and making sure that doesn't change? Will that affect their interest rate? And then what is a rate lock, and is that something that they need to look into as well as they're looking for their next home and trying to write offers and like secure the financing portion of that in advance?
So first things is understanding rate lock. Okay, rate lock is an agreement that you have with your lender between yourself, your lender, and a property. Okay, no lender can lock a loan without a property. If that lender is quoting you at the moment you do a pre-approval, that is just a quote. That does not mean this is the rate that you're going to have at the end. A property has to be attached to that rate lock request. Okay. Back in the day, or even a few months ago, we are able to quote a client and secure that rate for the next 10 days because the market wasn't as fluctuating or as unstable as it is right now. To where right now we simply can't, because we have seen, as you mentioned, the quarter point increase was from overnight. So sometimes we cannot secure that rate for that long, for no longer. But how the rate lock benefits you is that when you find a house, if you know that closing date, you agree with your lender to secure that lock, especially if interest rates rises, your rate is not increasing with the market. So locking the rate is a very important thing to do within the right time frame. Each situation has its needs. I'm not saying it's a smart thing to lock a loan if you're buying a new construction that is closing within 6 months. That's and that's another. We can do another show about that.
Yeah, we absolutely can.
For new constructions, because it is a very interesting thing to learn. A lot of buyers that buy them don't understand how that operates. But if you're buying an existing home, closing within 30 days, it is very important to go ahead and look into locking that interest rate as soon as possible, because you don't want to be subject to the market fluctuation. Credit score. Credit score does affect your interest rates. It's one of the most important things that it will affect your interest rate on, of course, and also what kind of loan program we are doing, what kind of down payment we are putting in, and all of those things kind of affects a little bit, but credit score being the main core of it. You have to understand the lender is looking at you as a liability. We are looking at you. That is your grade. Think about your math grade, right? We are looking at it like how smart you are. It's like how well you manage your money. So we are looking at that rate and kind of matching you to the right product. So there are some investors that are going to be open doors to someone with excellent credit, which you can understand, and they're going to give them their best rates because they want to use all their portfolio on people with that scenario. And if you have a below average credit score, we also have investors for you, but you have to understand that there is a cost associated with it. It's called the cost of credit, and it's a normal thing everywhere you go. When you buy a car, that's basically how they measure your ability to repay that loan, together with your debt to income ratio. But the good thing about Alpha is that we have a credit advisor and staff. Okay, so even if you are not quite there yet, this is why it's so important to listen to Tiffany and call me when you start looking, even before you start looking, because we can look at your credit, and if there is anything we can do, if your credit is average, but we're just a smidge so close to being an excellent, we can tell you things that you should do or that you're going to do, and then we can send you for credit rescore, and then we can get you above that average to where you are filling in within all those excellent scores to where we can get you the best possible rate out there. And we are willing to work not just with the people that are almost there, but the people that need a little bit more handheld and that needs, to work harder. We are here to help. We're here to stay for the long run. So just call us.
Yeah, so we have had an experience where we had a client, we send them to you. They weren't where they needed to be with their credit score. They did exactly what you told them to do. And instead of 6 months, it only took them 3 months. And they are in a home right now, right now. So I know that works. I know everything that you tell a client to do absolutely works. So this has been great. We want to thank you so much for, like I said, taking time out of your busy schedule just to kind of give us an overview of interest rates. I'm sure we will have more videos with you talking about different types of products and what you can do for our clients. I will say again, I am a huge fan of Miss Marcela Melo. So if you need a mortgage, please contact her at Alpha Mortgage Advantage, and we will definitely link her contact information at the end of the video and down below. So please reach out to her. She's not only licensed in North Carolina, she can help you in a couple other states. So she's a wealth of knowledge. Even if you're not ready, call her. And again, thank you, Marcela. Thank you. Any parting words, any advice you want to give our audience before you take off to go conquer the mortgage world?
Yes, don't be discouraged. Don't be discouraged. This is not something you should put your dream of ownership away for. You'd be surprised how affordable things are still in our area. So please call me. We are here to help. Miss Tiffany will be able to guide you through the best places in town. So that's what we're here for.
All right, guys. So don't forget, if you made it to the end of this video, please subscribe, share, and like. And until next time, bye, guys. Bye, Marcela.